Testing 1, 2, 3 in the old sound checkaroonie. Excellent. Awesome. All right. So I like to take a look at, as you guys know, the first thing we like to look at is, and it's pretty much in your weekly sheet. So I'm just going to rip right through it because it's at this point redundant. As I see these emails that came across my desk over the weekend about all the fabulous opportunities in the Amazon trade and Chipotle Mexican Grill and what a great move it was. When the reality sets in and you look at that move, whether you were doing condors, butterflies, whatever strategy you were into, option writing strategies, unless you were directional, it makes a very, and when you get into these expensive options, or the expensive, shall I say, $400, $500, $600 stocks, or what was $300 or $400 or $500 stocks, which are now more than that, it makes it very expensive to be kind of a directional trader when you're wrong. When you're right, it's phenomenal. And when you look at like Biogen, down 20%, right at the clip of just right off the knees. I think people are kind of expecting maybe more bad news out of some of the other names. And I was told by my comrade in arms and friend, Jeffrey, who said Regeneron had beat earnings, good stuff, and it got punished too. So is there too much baked into the biotech sector? One of our focuses in the market, it's just now coming to roost. When we take a look at what runs the market and these analysis and these charts that I put up here and provide in both packages of TradeStation as well as my Genesis, which really I think only 2 companies in the world allow me to really program these in the way I like them, more or less, and at least have the indicators and looking at the advanced decline. And as you can see, we broke below, and we talked about this already last week, but as a follow-through, the Russell really kicked into some high gear and broke some old lows in their advanced decline levels. Now, when I look at something that breaks an old low, the theory is that it's probably going to go back and test that low. And I think when the market comes down once, comes down twice, comes down thrice, at what point does it, if it breaks that last time, and as you can see, as I'll draw a simple little trend line analysis, we connect the dots, as some traders do, a nice little trend line off of the lows in the Russell. If we close below this last swing low, and everyone and their brothers and sisters were really focused in getting long near that 121, and it caused a nice little move, but didn't cause a strong enough move, and now we've made a lower high, lower low in the AD lines, and I think now we probably come back into testing maybe a little bit slightly lower, and that would be in the IWM anywhere between 117, 115, something like that. Is that a big move? Well, from Friday's close back down to here would be about a 5% move. Now, if we take it off the top from the highest weekly close and we go straight down and test that level, it would be almost a 9% move. A shallow correction in an ongoing longer-term bull market. With that said, is it an ongoing longer-term bull market? Well, that's left to be seen, because as everyone will look at this on-balance volume, certainly the volume action is speaking very well in the longer term, which I've just switched to a monthly chart. But the amount of stocks participating in the rally is starting to deteriorate. And I think at this point in time, all it takes is one big volume push to the downside, and it will change the image pretty dramatically. All it needs is one bad week on heavy volume, and the on-balance volume is going to succumb to people saying, oh my God, this sell-off was on strong volume. What the real, I think, focus should be, and has been this advanced decline. If more stocks do not participate in the rally and actually go down, and go down by a strong percentage, and I don't mean by a penny or two, If stocks like, we'll throw one out your way, Green Mountain Coffee Roaster gets halved, Biogen off 20%. If we get big names that get whacked, these are not small percentage moves. These are large percentage moves. So it's the quality of the decline in the majority of the stocks, not the few capitalized weighted stocks, that are keeping that index up. And if that's the case, we could then therefore see a bigger move to the downside in the next few weeks, which is in terms of charting a monthly chart. So I'm still in the camp that we could see more downside. What we discussed in this week's, because this week is going to be exciting. Why is this week going to be exciting? Well, if you take the time to go through your charts like many of you do, I'm very surprised and proud that many people go through their charts. But if we are at the end of a week, you look at weekly charts. End of the day, you look at daily charts. At the end of the month, you look at a monthly chart. Since we're coming towards the end of the month, spiders are trading near its monthly opening range, which is 207.73, which would form a potential monthly doji on Friday if we don't move substantially lower, if we hover right around this 207.73. The Qs are trying to close above last month's high, and they still look the strongest, by the way. The Russell may be forming a monthly low close doji, and not by in the content of looking at the futures, which is the Russell TF, but let's take a look at the IWM. And remember, I like to look at both the futures and I like to look at the ETF, the cash market, because sometimes we get a better setup, a better pattern off the ETF sometimes than we do the futures. Many of you can clearly see this extremely ominous chart pattern that may be forming. This is a monthly low close doji. So not all times do monthly low close dojis manifest into major downturns, but more times than not, they do manifest into downward price action over time. So at the very least, we need to be aware that we could see significant follow through this time. And the funny thing is, when I look at the monthly chart on this advanced decline, I go, well, where are we in relationship to the AD lines? If I compare an apple to an apple, how are the majority of stocks moving in this index at this point in time? So when we were at that last point, which we're below right now, the index was way over here. So just if we conclude the month and we go to this level right here, then I would say, well, where was the price of the action of the market the last time we were here? And you could say and argue that, well, if all things being equal and the market gets back down here, we could get to 117 and maybe the market overshoots their objective a little bit, because that's what markets do. They overshoot objectives. And so that would be an area of potential support over the next 6, maybe 8 weeks, 2 bars, okay? 2 bars on a monthly chart is 8 weeks, more or less, okay? So there is cause for concern in the marketplace. You do have a potential top. We had a longer term cycle, came to fruition. The market did peak out last week. I have no more new analysis to give you other than we will look for new trades to take advantage of maybe a pop, and we'll watch this on a day-to-day basis. But what I wanted to focus in on today and on as we conclude the month of July is to focus in on these top 5 markets: Spiders, Qs, Russell, New York Stock Composite, which also formed a low close doji, which we did discuss, and it's in last month's topic. But it had a low close doji on the NYSE, and we are now having that follow through. Then and now we get a market that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 months have gone by without any dramatic improvement to the upside so far. So if the path of least resistance is where the markets like to head, the markets, this particular sector has been sideways. Now it has a low close doji, and so it's possible. It's not even possible. It's more probable that it's probably going to want to test the downside action, because the market has now made in the last few months lower highs, lower lows, closes below opens, closes closer to current bar's low, close below past or prior lows, and we're going to potentially generate a monthly sell signal in the NYSE Composite Index on a monthly basis. That's the NYSE. On the Dow, which is something we've been talking about, and sometimes that's what the markets do. My lesson to every trader, especially newbies, is the market tries to bore us or scare us out of position, and there's like hang time, we call it, delayed reaction. Lighting a fuse and you don't get anything, and you go and look at the bomb, and then bang, it blows up in your face because you weren't patient. Sometimes we need to trust the analysis and see it through. And that's what I think that this market's been doing. When we look at this pattern, this does not look like an accumulation. It looks more like a rounding top distribution formation. The advanced decline as the stock in the Dow Jones, which is only 30 stocks, and it's not really as reliable because remember, they drop stocks and add stocks. They got rid of a few. They added Nike. They've added Apple. So it makes the AD lines a little bit skewed. But needless to say, you can clearly see as prices moved up, the majority of stocks have not accumulated or moved up higher in value on a month-to-month basis. And now we're at a threshold of potential bearish monthly sell signals. Haven't gotten one of those in the Dow, and I don't think people even know what one is because they've just not seen one in a very long time. So how relevant are the monthly sell signals? That would be my question I'd ask. Do they work? Well, in 2007, they worked pretty damn good. In 2004, it gave a monthly sell signal. While the market did not go down significantly, it stopped the advance. In 2005, you got a sell signal, and the market, it just stopped its advance until a new trigger 1, 2, 3, 4, 5, 6, 7 months later was initiated, and then we got a rise in the market. We got a sell signal in 2010, and yes, over the course of from the market coming back testing a resistance, yes, the market did go down. In 2011, another nice setup. So over time, we can argue that, yes, we do get some pretty decent, trustworthy signals in a very short test period. I mean, after all, 10 years is not a great test period, but the trend of the market was very strong. And yes, we are looking at other indicators, even the OBV, the volume on a month-to-month basis, not generally showing strong bullish conviction on the rally, something that we've been pointing to, which could trigger more eventual downside, and we'll see what happens when the market gets there. On Friday, to the room members of our community, the first thing I said early in the morning is, if you're bullish, go somewhere else because this might be a bad day for you. Jokingly, in my poor sense of humor, hopefully it was taken just, that's all I meant by it, as a poor sense of humor. And I said, I am not buying this break. And we continue to see a market erosion all day long until we got a little bit of a short covering rally into the close. But now we walk in Monday morning and we have convicted follow through. And it's a pretty good follow through, if many of you would realize. So what do? Well, the bond market hit my target, by the way, and at 155. And I noticed that we are through that level. Now, we got long as a kind of a swing trade in the bond market, and we took advantage of TLT, which we scaled out, took profits, and I'm actually flat TLT. So at this point, what new trades am I looking for? I think we've been stalking gold, and I think gold down here, we saw an exciting little pop on a little bit on Friday. I think it warrants, in a seasonally strong period of time with dollar weakness. Another trade that one of our community members asked us about was to look at the euro currency, and we said, you know, the euro could get to like what? If I quiz the audience, many of you would say, oh yeah, a person was saying maybe around 110.5, 111, up in that range. And here we are. And so with that said, the dollar's coming off and the Fed's meeting this week. So, you know, is the Fed going to raise rates or announce they're going to raise rates, or are they going to announce that the economy is still susceptible for, slippage, let's call it. I know Janet Yellen's not going to use slippage as a term, but needless to say, the Janet Yellen and pals of the FOMC, they may or may not reveal when, how, and how much, and for how long the Fed intends to raise interest rates. It may be, quite a hodgepodge of words. Now, I noticed, I could be wrong on this, but I noticed there's no press conference at the end of this one, so it's a quickie announcement. They're going to say something. I don't know if the Fed would build credibility if they just came out and without a press conference and said we're going to do something. So I'm not sure either. I have bad intel on the press conference info, but we'll look into it and let you guys know in the trading room this week. China is now on everyone's watch list. We came to bring that to your attention when everyone was focused on Greece. We were focused on China. And China really is, I think, the keystone to the global economy. Things are manufactured over there. You have a lot of foreign countries. Australia's big client is China. Europe has a lot of dealings, obviously, in China. And if things slow down and things aren't moving as fast, well, we do business with Europe. Europe does business with China. It's all interwoven, and I think there could be some, we could come to roost about some events and maybe some seismic shock waves that can affect our markets, or at what seems to be happening is a contraction in profit margins across the board. And again, the stock market is a vehicle that is based on earnings and profits. And if the market forecasts too much growth and the economy contracts, while we're not in a recession per se, but if there's too much expectations for forward growth and forward earnings, then valuations are too high and they come down. So that's the whole trick of this market. Not all stocks go down in a bear market. And I think everyone knows that. And I'm not calling for a bear market, but we are and have been calling for a correction like everybody's been saying for years. The difference is we've been able to time it, I think, together. We've been doing a better job and being more timely using specific technical analysis. Not that I want to toot the horn too loudly, but I definitely want to go through with what the techniques we use, cycle, seasonality, and specific tools. And the tools that we've been using obviously are sitting in front of us. So with that said, for this week, I had weekly low close dojis. These are the stocks that I see: Skyworks, Target, TJ Maxx, Lucadia, Financial Thrift. I mean HBI. These names we could look, if you are an aggressive trader, start looking at these for bearish options strategies to the downside, obviously. Daily sells while the market's in a weekly mode. We had 40 top names, including, and instead of giving every single name, I thought it would be interesting to just give some of the sectors. Like I found this interesting, the ITB, which is the home builders, the XHB, which is, of course, the peripheral home builders, XRT, which is more consumer discretionary, and the KRE regional banks. When we take a gander of our seasonality and we say, well, what's our seasonally weak period of time? In this time of year, in July, which of course we have a new month in August coming up, but we have semiconductors, which has gotten berated and cut off at the knees, and then consumer discretionary stocks, XLY. XLY is a considerably weaker period of time, and we have the XRT, XHB, and ITB, all kind of the peripheral of a consumer discretionary sector. So I think that might be something that we would be wanting to focus in on. XBD, DBA, ag stocks. Ironically, we have last week, if you read last week's commentaries, we had soybeans to watch for a weekly low close doji, and one did generate. We also had a trade last week that talked about a daily trigger on a daily low close doji pattern in corn, and it did trigger, and it had follow through weakness. This week, by the way, cocoa is in a seasonally weak period of time. If you're a commodity trader, you may want to look at cocoa because it generated a weekly, not only PPS sell signal in a weak period, and that weak period lasts going into August 15th. So you may want to take a look at cocoa prices on the downside for this week. We also have a what we would consider for cattle prices, a bear spread right now, because bull spread. You're buying December, it's not as liquid, and you're selling June of next year, 2016 cattle, on or about 723. This is a longer term spread trade, which means you may be committing some extra capital. What I will do is in Genesis, I will actually upload those spreads in the next day or so, or tonight. I will actually upload those spreads into the multi-time page. It's the only platform that I can actually put stuff on the charts, upload it to the cloud, and you guys who have the Genesis Lifetime can download it. So we've done this when we have specific markets that we're looking of interest, and so we will do this on the spread trades, all right? And I'll have that uploaded today on this multi-time page, and you know how to get that. You just go up to pages, you go to load shared pages, a little box pops up, you see John Person, this little green thing, and it tells you the last time something was updated. You click on the green button and you look for the new change if you don't know which or remember which page it was, and basically I'll tweet out that I've uploaded it so Genesis subscribers can download and import whatever the new page that we've just created for you guys was. All right, so that's kind of exciting, and that's really, you know, a neat way of using technology, by the way. So when we come into looking this week, in essence, planning and scanning, what Monday is to do is to just kind of go over what the thought processes are, where we are in not just a business cycle, but a trading time period, like the end of the month that people might not be aware of, and also to look to see where we are in relationship to the opening price of the month. Those are important things, and that's what we have listed into this sheet. So as far as buy signals, we had Regions Financial was a weekly high close doji, daily buys in a weekly buy mode. We did have 13 names, XR, Xerox, Pandora. These are names, the KIE, which I'm not too excited about because the KIE enters a seasonally weak period of time, but I felt compelled to keep your eyes and focused on what did generate weekly buy signals. So what am I looking at doing? This week, I really don't think that most of these reports are going to amount to anything, but it's all going to be on the essence of the Fed and these earnings. And a lot of the earnings, Alexion, Amgen, you can see Aegean. We have a ton of biotechs, and biotechs weigh in on the NASDAQ 100. And we have a few technology names like Akamai, which is in the NASDAQ 100. But other than that, you know, you got some energy guys out there. You've got Cavium, a semiconductor, which has been in its own world. So keep in mind that we've got from Tuesday through Friday a lot of activity that just waits for us this week, and it's all going to be right there on the heels of Janet Yellen and team. So with that said, we will also have this, our clients get this in the trading room, and we send this out as a courtesy to our friends that have been with us a long time, so you'll be getting our email as well. So with that said, let's go over to our trading room. And give you a gander of what's the roundup of the market. Sector that's stronger or up marginally today, and it is utilities. Bonds, utilities, kind of the same thing. TLT is up a bit. The home builders, XHB sector, down just a tad. A lot of the names in that space aren't doing great. And on the opening, first thing this morning, materials are absolutely, which we've talked about and gone over, how how bad the XLB really has looked. We've done that from a relative strength perspective, showing that relative strength perspective chart, which I think we should take a quick look at before I give some day trading levels out. Where did I put it? There we go. Also, another thing you'll find in the weekly observation is, as we get to this page real quick, which is pretty great news. It really is, as a trader, some dynamic information. We also went through and gave you in the weekly observation here a couple things. You just got to read through it. It's not a lot of words, all right, but I think this should be in its own separate paragraph. Number one, the McClellan oscillator reading at -143, and I went through a little bit of time for people and showed that in September of 2011, after the market succumbed to nearly a 20% correction, is -143 a real negative reading? Well, back in 2011, it got as low as -263. So I guess comparatively speaking, the answer is no, it still has room to move. The daily reading is at -132, and back on August 8th of 2011, the daily reading was as low as -463. So comparative analysis, if you want to compare against recent history, you would say on average, getting down near the -200 level is meaningful, but boy, we can and have seen some pretty significant declines in the AD levels or the McClellan oscillator on both daily and weekly. So most people don't go back far enough in time because that's what their chart just shows them. And you know, you're in a hurry, or you just want to know what's going on. You only have so much time for analysis. And then you see, well, look, on the average, the market gets down. It's a little oversold, but this time might be a little bit different. If we do get down, and we get down hard and dirty, yes, we could see more downside in the marketplace, especially with these readings. If we went back in time, you will note that even on a weekly reading, getting back into the March 08 low, -267. So we really can see some more significant damage. In 05, we were down in the 200s, and you know, I can keep going on and on and on. I mean, you can see -285 in 1998. That was August of 98, long-term capital management. So yes, in times of turmoil and duress and market capitulation and declines, the weekly McClellan oscillator can certainly get a lot lower than where the current reading is. All right, so let's take a quick look. Last but not least, I know these squiggly lines aren't really useful for some of you, but what they tell me is that all the markets are starting to roll over, and the markets in dollar terms in the E's, which would be Germany, France, Latin America, emerging markets, Italy, Germany, I already mentioned, emerging, and we could see that the Dow's already negative on the year, and everything's starting to roll over quite significantly. When we take a look at sector analysis, this is what we've done for you guys in the past. We noted that the biotech, and I don't know how many times I'm probably blue in the face saying there was a wide dispersion between the performance between the biotechs and the worst performing sector, which ironically at the time would have been energy. And now when we take a look, and I want to share this with you real quick because this is kind of interesting. Let's take a look at this one right here. This would be our industrials, which everyone would think should be pretty good. And again, this would be XOP. And let's medium thin. So XOP negative now 16% year to date, but it's really industrials that have, if the market's going to be good, industrials and even materials. And if we change that to medium thin, we'll see where we are. This grouping here, energy, industrials, materials, really is a way on the market. And I think with everybody and their brothers and sisters long biotech up here, it's still, I mean, from just a very short time, we've just already dropped from peak of 27, we dropped 9% off the top in the IBB, by the way. And so could we get down another, I don't know, where could we get down to? If we actually got back into maybe this area where we were in May, that would be another 4%, something like that. And, 12 to 13% year-to-date gain for the IBB would be what I would probably expect to see for more follow through to the downside. So anyway, I wanted to go through just to share with us our relative strength to what the sector performance was, the McClellan oscillator, because it was what was discussed in our planning and scanning and our weekly thoughts and observations. With that said, everyone have a great week. That does conclude today's video. Thank you.